Are you planning on taking a loan in the future as an individual or a business owner? Well, then this video is for you. I hope you've heard about credit score. What's a credit score? A credit score is a three-digit number that represents a person's credit worthiness, right? And it is actually calculated based on your financial history in the past. So I believe some of you have taken loan before, one way or the other. Some of you may have taken it through MTN Quick Loan and a lot. Most of you just at the end of the day throw the SIM away and then just forget about the payment or whatever option that is available, which is something we should discuss, or which is why I'm making this video. If you are talking about credit score, we are talking about your financial history, your performance in the past years, right? Your financial performance in the past years. Have you taken a loan from a company, from an institution, from a bank, or from any financial institution or sector that you haven't actually paid back? Well, then the probability of you not getting a loan in the future is high. So it may have even student loan and any other loans at all that is either you don't pay, or you still till the time passes before you pay back, right? Which means you default all the time. The probability of you not getting a loan in the future is high. So the credit score is actually driven from this particular financial history of yours. Credit score is calculated based on information on your credit report. So one example is your payment history. How do you pay back your loan? Do you default? Some of you at all, like some of us, as you know, you just take the loan and then you vanish. There are people who have been taking the loan and then they run away outside the country, and it becomes so difficult for you to trace them back. And there are also some people that take loan and then they default, they don't pay on time, so they actually spend much time, or they have to do a follow up tracing them before they could pay back the loan. If you are that kind of person, the probability of you not actually getting a loan in the future is high. And not only loan, sometimes it even goes into employment. Yes, you getting an employment sometimes in the future may be a bit difficult for you. So you should be careful how we take loans and then refuse to pay back in time. So if you know you've taken some loan and you are having a kind of plans of not paying back and all those stuff, then I think this is going to actually affect you in the future. Both even getting a job, as I said earlier, or even getting a position in the future, because all those reports may be and they may be used to assess your credibility and your performance or your trust in the future. You end up being slapped with that kind of credit history, right? And it's kind of like a shame, right? And I believe those of you who have been taking student loan are also aware. So when the time is due and you don't pay back, they post your names online. And in the future, just in case you are going for a loan or you are going for a position or something, they may use that against you. So you should be very careful on certain things that we do in our early days today, so that it doesn't affect us in the future. Second thing they look at is your credit utilization. Say credit utilization, I'm talking about how much loan do they give you, how do you use it, right? So let's assume you've applied for a loan before, like maximum of 10,000. So in that 10,000, next time in the future, they look through the amount of money, the highest amount of money or the maximum amount of money they paid you, or the previous institution paid you, and how you actually paid it back. So they weigh the two and see how much they should give you this time around. So, and you are aware, those of you who have been taking loan, when you take loans and you pay back in time, they increase it in time, right? So those are the utilization process that I'm talking about. How do you utilize your previous loans, and how they actually plan on increasing it so that you can, because they believe you can pay back, right? So those are some of the things that they look at. So the credit score is actually calculated based on your performance. It's just like back in school, where your performance, academic performance, is actually calculated based on your tests, your achievement, whatever assessment that has been made, right? So it is all compiled together to grade you. So that will determine what will be your score in the future on your performance. So that's the same thing applying in the financial sector. So the credit score is actually there to determine how qualified you are as an individual to, or as a business partner, owner, to request for a loan and then have access to them. So if you calculate your score and then you get like 750 to 800, then you are excellent. That means the possibility of you paying back the loan is very high. So you can get a loan at any time, right? They will give you that loan. That is if you have your credit from 750 to 800. Now, if your credit also ranges from 700 to 749, then congratulations, you have a good credit as well. You can also request for a loan, and you possibility of you getting the loan is very high. Now, the fair credit also ranges from 650 to 699. So if you have a score of between 650 to 699, then congratulations, you have a fair credit. So you see, we just graded from excellent to good credit and then the fair credit. So those are the ranges as well for the fair credit. So that means you are at least you are in average, right? You can pay back. The possibility of you paying back is high. So you can actually qualify for that particular loan. So if you also get from 600 to 649, then you have a poor credit, right? You have a poor credit from 600 to 649. You have a poor credit. And for that one, I don't know, it depends on the financial institution or the sector. So they can decide to maybe look at it if they should give it or not. And mostly, they if they see you have a poor credit performance or something, they mostly maybe will request for a collateral or something. I don't know, maybe a way of getting, because they always want their loan back, so they may request for a collateral. That's the problem we have in Ghana here. The problem is that we don't pay back our loans. So right now, if you are looking for loan to from any institution, they don't pay, right? They don't give you, right? They don't give you that loan because they are afraid you will not pay back. You see, that is the problem we have. But you go somewhere else, it is there. They give out loans even without collateral. But Ghana here, before you could request a loan, they will always look for a collateral because of our mindset that we have here. So we have to change all this mindset. So mostly, if you have below 600 credit score, that is the possibility that you are not going to get the loan at all, because at least it ranges from, just as I said earlier, right? It ranges from 300 to 850. But if you get below 600, no, they actually think you don't qualify for that particular loan. You see, so we have to change this our mindset that we have in Ghana. If you take a loan, pay back. If you do something like build that kind of trust, that kind of creditness, right? Build that kind of trust, that kind of credit worthiness, right? So that tomorrow or in the future you may not have any problem concerning financial institution or this or those any other issues at all. This applies to not only individuals, it applies to everyone. Even in the country, the country is going for a loan in IMF, they assess our credit score. They see how you pay back, how is your economic performance, how would you pay back, all those things. They look at it, right? So they look at your previous financial history. How have you paid your previous loans? How do they intend to get their money? When will they get their money back and stuff? All those things are calculated based on that. So it is very necessary, important to build that kind of integrity from the very beginning of this stage that we are right now. So those are some of the important things that we are discussing right now. So just like I said earlier, credit score is actually used by lenders, financial institutions. It is used by our employers to assess your performance and then your qualification or your credit worthiness, right? In your future, right? Both in employment and your loan credibility. Thank you for listening. This is Mark Wim. Bye.